We are live from Bloomberg's World Headquarters in New York. I'm Shonali Bassick, stepping in for Matt Miller.
And we're also live from our studios in Washington, D.C. I'm Kaylee Lines. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
And today it's Grayscale versus the SEC. A court fight is underway after a regulator clapped down on Grayscale's GBTC ETF conversion. Have the odds of a victory changed during the day's worth of arguments?
And we're putting the spotlight on another ongoing legal fight. Ripple CEO Brad Garlinghouse talks his beef with Gary Gensler and the debate over what is a security.
Plus, Kaylee, we're looking at how investors are digesting the unraveling of Silvergate as regulatory scrutiny intensifies. And Nic Carter of Castle Island Ventures is explaining why he thinks the Biden administration is quietly trying to ban crypto.
All right, so all of that is ahead. But first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is the major digital currencies, Bitcoin and Ether, are under some pressure today, maybe falling in tandem with other risk assets after we heard Chairman Powell speaking on Capitol Hill. Right now, Bitcoin down about 0.5%. We're trading at 22,300 or so, while Ether is trading at 1561. One outlier, though, is XRP. Of course, this is central to that one SEC lawsuit we were talking about. We'll have more on that in just a moment, but XRP is up about 1.8% on the day. And of course, the other lawsuit very much in focus today relates to Grayscale versus the SEC, and oral arguments perhaps favoring more toward the Grayscale end of the spectrum than maybe was previously anticipated. And you see that reflected in the performance of the Grayscale Bitcoin Trust, which of course is what is in question in the attempt to convert it into an ETF. It right now is up 8.4% on the day. And importantly, Shonali, its discount to its net asset value is shrinking. It was 46% last week. We are south of 40% now.
Yeah, absolutely. As low as 35% today. And that's after those opening arguments in Grayscale's lawsuit against the SEC. Traders are now betting on a higher probability of Grayscale actually winning. Going into the case, Bloomberg Intelligence thought the SEC was 60% favored, but now they think Grayscale is 70% likely to win. Bloomberg's Katie Greifeld joins us now with the latest. Katie, how much does this save Grayscale here? That discount was pretty significant. There were calls to lower fees. If they're able to close this discount just by getting closer to this ETF conversion, do all its problems go away?
This is some needed good news for Grayscale. Like you mentioned, that discount, it has been so stubborn for so long. It's been in place for 2 years, back when Bitcoin was still in a bull market. So I think there is a lot of surprise that it seems to be going as well for Grayscale as it is. I mean, as Kelly walked through, the fact that GBTC is actually rallying today while you have Bitcoin itself lower says a lot. And it seems like the argument that basically that the SEC is being arbitrary in its distinction between the spot market and the futures market seems to be winning some sway with the judges. Bloomberg Intelligence out with a note saying that at least 2 of the judges seem to say that they weren't satisfied with how the SEC was distinguishing those
Seem
risks.
to, I think, is the operative word here. Do you think that there's a chance that traders might be getting ahead of themselves here? What is the road ahead? Because these are just the opening arguments.
Just the opening arguments. And I think that's a good point, that there's still potentially a long road ahead here. I mean, Bloomberg Intelligence did note that they're not expecting a ruling until the second quarter, the third quarter. So there's a lot of wood to chop here. It wouldn't be the first time that traders got a little bit excited about something and went too hard in on something. But just judging from today, the temperature seems to be a bit of a surprise.
And a bit of a surprise in favor of Grayscale. But in theory, Katie, this goes well beyond Grayscale. What are the implications here for the wider industry?
For the wider industry, I mean, think about when you think of the interconnectedness of this industry, the lawsuit that we saw from Alameda yesterday aimed at Grayscale. That alleged that Grayscale charges, quote, exorbitant management fees. It also accused them of improperly preventing redemptions. Of course, Grayscale has said that suit is misguided, but it really goes to show that this is a systematically important trust that we're talking about. It's the biggest digital asset trust that there is, and clearly it has a lot of investors who would really like their money back. They would like redemptions, and Grayscale's case throughout this is that they've been in support of ETF conversion. They've been working towards that. So again, it's early, but it seems to be going well for Grayscale.
So is Katie, the indication here, should they prevail against the SEC in this case, it also makes it more likely that they are to prevail in the Alameda lawsuit or the Osprey lawsuit, for that matter, in these other cases?
It's really hard to say exactly what this means for some of the pending lawsuits. And there's many that have been aimed at Grayscale at this point over the fact that you do have that very stubborn discount, persistent and deep. I will say for Grayscale, it's interesting. If it is converted to an ETF, a lot of the focus seems to be on the management fees. Currently, GBTC charges 2% annually. If you look at the ETF world, that is an extremely high fee. Even the futures-based ETFs are high by ETF standards, but they're at 95 basis points. So if GBTC was to convert to an ETF, whether that led to them having to lower fees, whether it led to wide-scale redemptions, that might not necessarily be good news for Grayscale.
Yeah, I'm looking at the Alameda lawsuit. One of the things they say is over $1 billion in fee income over the last 2 years alone. And the discount would mean about $250 million for Alameda, which, of course, is going through that bankruptcy process. Is there any chance here that, despite them fighting this lawsuit, that they would, now that they're so much bigger, lower the fees? Or is that an absolute no-go from what we know of Grayscale?
I mean, we should ask Grayscale that, but it seems like all the focus that Grayscale has had has been on this lawsuit, preparing for this lawsuit. Of course, this has been in the works since June when they initially sued the SEC over that decision to deny the conversion at the time. So we'll see. I mean, there's a lot of pressure on them, both in the form of lawsuits and just investors being vocal that the fees are extremely high. They're in line with other trust products such as this, but when you compare it to an ETF, which is what they're trying to be, 2% is pretty much unheard of.
Hedge fund fees. Katie Greifeld, thank you so much for your time. Coming up next, from crypto's legal fights to Silvergate's mounting troubles, we're going to discuss it all with Nic Carter of Castle Island Ventures.
But there also are more legal fights to talk about. Ripple CEO Brad Garlinghouse has some sharp criticism for Gary Gensler, so we'll have more on that beef in litigation ahead.
And to access all of the latest data and news on crypto, check out CRYP Go on the Bloomberg terminal. This is Bloomberg.
We need a clear rule book.
Clear rules of the road.
Regulation that's clear.
We have one goal at the SEC is for them to come into compliance.
What we see is, quite a lot of turmoil. We see fraud. We see a lack of transparency. We see run risk.
Regulation through enforcement. This is not a healthy way to regulate an industry.
The law is the law, and they need to come in and properly follow the laws.
The U.S. really is already behind.
Driving innovation outside.
We don't want it to be like 5G or semiconductors that went offshore. It's actually a matter of national security.
We will end up inevitably with sensible regulation. This is the awkward adolescence.
And the mounting troubles at Silvergate may add to that regulatory debate. At first, Silvergate was just like any other regional bank, and its push into crypto, it looked like a huge success. By creating a payment rail called the Silvergate Exchange Network, it allowed for almost instant dollar and euro transfers among the biggest crypto players. And the so-called Send network helped facilitate trading across major exchanges, and hundreds of billions were transferred yearly. Silvergate also started offering everything from Bitcoin-backed loans to high flyers like MicroStrategy, while being a banking partner to firms like Coinbase and stablecoin issuer Circle, both of which have reduced exposure to Silvergate as it has faced trouble in recent months. The problem now is twofold. One is a matter of its own finances facing pressure as crypto slumped. Silvergate built a critical thread through the crypto industry through the Send network and saw its shares shoot up to $222 at its peak. But its stock was already under some pressure by October of 2022 as transfers slowed. And the much bigger issue then became FTX, a significant client. So another problem for the bank became a regulatory one. While Silvergate initially said that FTX accounted for less than 10% of the firm's deposit base, regulators, lawmakers, short sellers, they all soon began circling. Bloomberg has reported that Silvergate is allegedly the firm that opened accounts for FTX founder Sam Bankman-Fried under a different name, which helped him avoid stricter due diligence. The bank has not been accused accused of wrongdoing, but it is the subject of an investigation by the U.S. Justice Department. And what's more is that Silvergate began to hit more dire financial troubles by the end of last year. It had to sell securities at a loss and took an impairment charge tied to $1.7 billion worth of securities, while also reporting a $1 billion loss in the fourth quarter. It suspended a preferred dividend payment in January, and then by March, it raised a much bigger warning that it had to delay its annual filing as it analyzes those regulatory inquiries and investigations. It had said that portfolio losses and other issues could impede the ability to operate as a going concern. You can see just how much the bank's deposit base had taken a hit around the time that FTX issues came to surface, and the pressure has only mounted since then. That latest warning had sent the stock into a 60% spiral, hitting almost $5 a share. And the stock has only sold off further as companies like Coinbase, Mike Novogratz's Galaxy Digital, Circle, and stablecoin issuer Paxos all announced a pullback from Silvergate. Silvergate now is in search of a path forward. But remember, it's also a federally insured depository institution, and that it had taken advances from the Federal Home Loan Bank, underscoring crypto's potential ties to the U.S. banking system. And that has gotten regulators so very concerned. It's a watchdog's worst fear. And if things keep on going south, the banking system in the United States may close off to more crypto more drastically.
All right, Shonali, thank you so much for that. Let's continue this conversation now. Joining us is Nic Carter. He is founding partner of Castle Island Ventures, and he recently wrote a piece detailing what he says is the Biden administration's coordinated ongoing effort across virtually every U.S. financial regulator to deny crypto firms access to banking services. Nic, to quote your piece, you say the U.S. government is using the banking sector to organize a sophisticated, widespread crackdown against the crypto industry. How does Silvergate fit into that?
Thanks for having me on. Yeah, Silvergate is at the center of the storm. They have been investigated, given their ties to FTX and Alameda. They're now facing enormous regulatory pressure, and as a consequence, their clients are deserting them. Of course, the bank run and the withdrawals of the deposits don't help, but it's certainly the case the regulators have piled on and have made life much more difficult for this bank. So they got themselves into trouble, but the Biden administration's crackdown on banks through bank regulation certainly doesn't help their predicament here.
Can you walk me through your thinking about that intention, though? Because there is an argument to be made on the other side that they're just trying to regulate the industry more carefully to prevent any kind of systemic risk or risk to consumers.
Well, there's a difference between sound and sensible regulation and trying to effectively choke off the industry's access to banking. You know, crypto activity in the U.S. that's legal, I don't see any reason why these crypto firms shouldn't have access to banks. But because of the bank regulators' actions here, and we see this on a cross-agency basis, it's ubiquitous, crypto firms, especially early-stage startups, the ones that we talk to, they're having a really hard time getting access to new banks, especially accounts where they'd be making transactions on behalf of clients, exchange-style accounts. And that's just inhibiting the ability of the market to operate properly, and it drives a wedge between smaller companies and the larger incumbents that have the ability to retain those bank ties. So it's bad for competitiveness overall. I don't see an argument why a perfectly legal industry should be choked off from access to the banking system.
I'm kind of curious also about the importance of the fiat rails here, Nic, because when you take a look, it's been really interesting, the uptick of euro-denominated transfers when you look at what is posted by data provider Kaiko. Is there a chance that Europe actually, given the regulatory regime that is being created, starts to play a much bigger role than the United States? And what kind of roadmap could that create?
The center of gravity for the crypto industry globally is still the United States. However, they could possibly squander that advantage entirely. The regulatory winds here are extremely hostile. Europe, on the other hand, has passed the MiCA regulation, which is a sweeping regulation covering crypto activities in Europe, virtually every sector. And certain European states have proven themselves pretty amenable to hosting crypto firms. So they are moving here, and I believe partly it is a reaction to the U.S.'s intransigence and demonstrating that there are other jurisdictions where crypto firms could domicile themselves. The U.S. should be awake to that and be wary of the fact that other jurisdictions are competing for the vibrant crypto sector. So, yeah, I think U.S. policymakers should be extremely concerned about that.
You know, speaking of concerns here, the problems with Silvergate is kind of one of the biggest problems we're seeing among a FDIC-insured bank. What is the case study here? What is the word of caution to be taken by the struggles that Silvergate is facing?
Well, their main issue was that they were very exposed to the crypto sector, and so they had extreme concentration in the deposits, and of course the outflows and inflows are very correlated. The problem is that larger banks have a disincentive to servicing the crypto space because it only brings them trouble and additional overhead and costs. So you get, as a consequence of that, you get these smaller regional banks that put their hand up and say, we will be the service provider for crypto firms. But the consequence of that is that they're very exposed to the in and outflows and the vicissitudes of the crypto space. So while banks are discouraged from doing business with crypto, you'll get the Silvergates of the world that will suffer with the eddies of the crypto markets. So the issue is structural, I would say.
Nic, obviously all of us will keep one eye on Silvergate, but our other eyes today likely is on SEC versus Grayscale, or Grayscale versus SEC, and the oral arguments that took place. Based on the tone we saw or heard from the judges, what is your assessment about the prospects for a spot ETF?
Well, I thought the oral arguments were strongly in favor of Grayscale. I thought the judges received them positively. My read prior to the case was that it would be unlikely Grayscale would prevail in that lawsuit, and it looks like at least 2 of the 3 judges sounded very sympathetic to Grayscale and questioned the SEC's arguments, which I found clownish, pretty harshly. However, all that said, as Katie said on the prior segment, it will be months until there's a resolution in the case, and Grayscale winning the case doesn't strictly mean that we get a spot ETF approval. It just means that the SEC could go back to the drawing board and find another reason to deny the application for the ETF, or the SEC could even withdraw those futures ETFs, which currently exist. So it's not strictly, it doesn't guarantee that we get a conversion to the ETF, even if Grayscale prevails.
And of course, we have to wait and see if that even happens. Nic, we have to leave it there, but thank you so much for joining us. Always great to get your take. That was Nic Carter of Castle Island Ventures. And for more crypto conversation, be sure to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore the stories and the people shaping the ever-evolving digital landscape. Look for that every weekday, wherever you get your podcasts. This is Bloomberg. This is Bloomberg Crypto. I'm Kaylee Lyons in Washington with Sonali Basak in New York. Well, Ripple has been locked in a legal battle with the SEC for more than 2 years, with the regulator alleging the company failed to register its XRP token as a security. Ripple's CEO Brad Garlinghouse joined me here in Washington last week and said he expects a decision in that lawsuit soon. Plus, he had some sharp criticism for Gary Gensler.
I certainly felt very blindsided. You know, I think when you go in and we have done this around the world, by the way, I'd say a significant percentage of my time is meeting with regulators on a global basis. And all of those have been constructive, except for here in the United States. I mean, consider this. The only country on the planet that thinks XRP is a security is the United States. We have a thriving business outside the United States, yet we're a U.S. taxpayer, regulated here in the U.S., and we have a U.S. regulator who I think for power and for politics is fighting these fights about what is a security, not because it's good policy or it's good for the United States leadership in these technologies, but because it's good for the power and politics for the SEC.
Okay, so let's put the XRP security question aside. Let's talk about XRP and its utility in facilitating cross-border payments. What's demand looking like for Ripple right now in that regard?
Look, 2 parts to that question. One is the reason why we use XRP is it's extremely fast and it's extremely efficient and frankly low cost on a per transaction basis. So it's ideal for payments. And that isn't to say that other blockchains and other tokens don't have other great use cases, just that when you're talking about payments, XRP is uniquely positioned to kind of solve that problem. Demand for us outside the United States has been outstanding. Business 2022, despite having a ton of headwinds from the SEC, as well as kind of the global crypto winter, if you want to call it that, 2022 was a record year for Ripple, without question. So demand is very high, and I think it's because we're solving a clear problem. We have a clear customer. That customer likes the solution we're building, and we continue to see demand from that. I think the whole industry needs to, particularly this time, step back a little bit and say, what problem are we solving? How are these technologies uniquely positioned to do that, and really focus on utility?
There is utility. There's also investment and behavior in which it's just buying an asset because you think XRP is going to go up in value. Why, in that case, should it not be treated as an investment contract?
Well, I call that speculation.
Correct.
Which is different than an investment contract, actually. People are speculating in the same way that people speculate on diamonds. They speculate on oil. They speculate on pork bellies. Those aren't securities. Just because something actually fluctuates in price and people seek to generate a profit from trading it doesn't make it a security. And so, again, this is where the law is actually super important. And I think the SEC, in trying to prove their case, has failed on virtually all of the Howey factors. And this is the Supreme Court case from, I think, 46 or something that identified here are the factors to determine whether or not something is a security. And just because someone seeks a profit does not make it a security.
Fair enough. Okay, so you've raised a few times that the U.S. seems behind in many aspects. I wonder how behind the U.S. also is when it comes to a digital dollar or just the CBDC conversation, because I know Ripple does a lot of work around that as well. Where does the U.S. stack up in the, I don't know if I can call it a race, but in this global movement toward that?
Well, I think it's probably fair to call it a race, because I think some of the activity you're seeing globally around central bank digital currencies is fear of missing out, FOMO. And I think Ripple does work with a number of central banks around the world. We've publicly announced some of them. And we're in the phase of kind of testing, experimenting, and they're issuing their central bank issued digital currencies on the XRP ledger. I think these are interesting use cases. I'm not sure yet how to think about the utility for the United States. Should the United States issue a central bank digital currency? I mean, today at an event here in Washington, Senator Loomis was talking, maybe Senator Gillibrand was talking about, she doesn't see that applying to consumers, but only from a central bank to central bank. I think it depends a little on how we define these. Stable coins probably will be the first step, I think, in Congress to get some regulatory and legislative clarity, which I think is a good thing.
That was Ripple's CEO, Brad Garlinghouse, speaking with me last week. That wraps it up for Bloomberg Crypto this week. But coming up next week, we'll be talking to the Bit Digital Chief Strategy Officer and Perry Boring of the Chamber of Digital Commerce. This is Bloomberg.